I'm Alix. Welcome to Bloomberg Commodities Edge, where we focus on the companies, the physical assets, and the trading behind the hottest commodities with the smartest voices in the business. Let's get right down to Data Dig. We're going to take a look at some of the top market stories of the week. First up, oil inventories. So we're starting to see the beginning of the fallout from Texas. You had stockpiles of crude increasing overall, particularly about 1.29 million barrels. That's mostly on the back of a build in the Midwest. Demand, though, was also hit. Refinery runs fell to the lowest level since 2008. That just really eclipsed that supply shutdown. What we also learned is that demand got an enormous hit when it comes to gasoline, fell by more than 1 million barrels. Diesel also sank, too. You can see how it kind of rolled over, signifying what we saw in Texas. And those pockets of pain can really be felt all over the global energy market. Here is one way to look at it. Naphtha, that basically turns into petrochemicals, and it's used to make everything from medical masks to car interiors, and it's typically sent to Asia. And you can see here we're looking at a little messy pricing. This is backwardation, so the first month is more expensive than the second month, and that's all because of that demand and the supply not matching up because of Texas. It just matters how long that's going to last for. All right, let's now get into the ring. The big conversation this week was also, are we in a commodity super cycle? Well, commodity markets, no doubt, yes, they're booming. You got oil up by 30% this year, copper hitting a 9-year high. Grain markets are experiencing shortages. We're seeing supply production responses. How big is it going to be? Let's ask Bloomberg's Eddie Vanderwalt, who covers metals and commodities. He joins us from London. Eddie, do you buy the commodity super cycle story? Are we in one?
I absolutely do think so. I think there are two elements to what you just mentioned. I think on the one hand, there is, a demand boom that's come back, on the back of COVID, and people are getting very excited about the summer. And at the same time, commodities are slightly harder to transport as a result of all the new COVID restrictions and all of that. So I think the supply side's being hit. But I think the super cycle element is part of that. And particularly that's all about, EVs and our shift away from the oil economy to what's really going to be the age of copper, I believe. And I think, that is just something that we're not set up for. Electric vehicles are arriving a lot quicker than people had expected as little as a year ago.
The age of copper, that's it. Like, that's the thing. You have to write a book about that now. Anglo Gold American CEO Mark CUTIFANI was talking just about sort of the supply dynamic. This is what he was talking about.
Supply and demand is pretty well balanced. But if you look at growing demand 3 to 5% looking forward, and the ability of the industry to deliver into that demand, particularly if the electrification technologies are driven as hard as we think they'll be driven, I think the world will struggle to fill that demand.
But Mark, I guess, Eddie, when Mark was talking about why won't supply actually pick up? Why won't there be a more immediate supply response?
Look, on the one hand, and that's why I call this the age of copper and not the age of lithium, right? I think, in order to deliver that electricity, first you need loads of copper to get it to your car, and your car is going to use more copper than But to your question about why supply isn't going to pick up, for commodities like lithium that we are newly discovering and newly finding useful, there are loads of resources out there that we haven't discovered and haven't tapped. Copper, we've been using since Roman age, so since the Roman age. So really, we have discovered all the big resources that we're going to find. There's no big Grasbergs out there that we're going to discover tomorrow, and that's the problem. We have been using this stuff for a long time, so supply can pick up so much, but it cannot keep up with the growth in demand that we're going to see.
That's such a great point. Also, as of now, relatively immune from what we're seeing in the bond market. Eddie, thanks a lot. Bloomberg's Eddie Vanderwalt. Time now for Commodity in Chief, where we talk to one executive in the commodity world. And today it's David TAWIL, CEO of Centaurus Energy. Before we hear from him, let's dig into the potential for the next big play for global shale. Argentina. It is the one place outside the U.S. where shale drilling could really take off, in particular in MUERTA in Patagonia. Now, experts have been saying this for almost a decade, so will 2021 actually be the year? So in December, oil production reached a record high of 124,000 barrels of oil a day. Now, Rystad thinks that number could hit 150 by the end of the year. The potential: the rocks are thicker, so more oil is trapped. You got higher pressure, so you can get more oil out, and it's underdeveloped. And there are a ton of big players in the market. You got big oil like Shell, Equinor, Chevron, Total, and Exxon. You got some big local players, especially YPF, which is majority owned by the government and made up 95% of shale oil production 4 years ago. And then one small local player, Vista, which delivered record production in December of 15,000 barrels of oil a day. The main problem, Argentina itself. You got infrastructure bottlenecks, export and import controls, and flip-flops on subsidies has made access to international capital markets hard to impossible. Now, the world will always need oil, even as it tries to move away from it. But will the world need it from Argentina? Enter Centaurus Energy. It has properties in multiple provinces in Argentina with operational conventional production and oil-producing shale assets in Vaca Muerta. Now, the company recently merged with Crown Point Energy, a junior oil and gas company producing conventional oil in Argentina and holding other exploration blocks. Now, I recently sat down with the newly minted Centaurus CEO, David TAWIL, and asked him about the capital flows going into the region.
We know that the Russians have been looking for quite some time. The Chinese have been looking for quite some time. And I expect that they will go ahead and take advantage of a market where a lot of developed countries, very environmentally focused, will pull back.
Then I take a look at, say, YPF, and basically the government just not releasing enough dollars for them to pay back short-term bonds. They went ahead and restructured like the whole curve. When you have something like that psychologically, how do investors get over that?
They do. The investors, no, the investors have gotten over it with respect to Argentina a number of times. And I think investors will also get over it with respect to YPF. You're not dealing with, wet behind the ears green investors when it comes to investing in the debt of Argentina or in the debt of the provinces or in the debt of YPF. They all know how the game gets played.
How much capital needs to come in a year?
5 to 10 billion.
A year?
To maximize Vaca Muerta.
That's a lot, no?
It is. It is. And I think if the government were to be thoughtful about it, and the question is if they can be thoughtful about it, but if they were to be thoughtful about it, I think that they can set up the right incentives to allow for that kind of investment.
What's the incentive? I'm assuming no export caps, number one, no right of first refusal for refiners. But walk me through realistically, what the government would need to do and what they actually would do.
Well, they'd have to give up some in the short term in order to gain a lot in the long term. So the taxes are quite high. And when I say taxes, I mean that broadly, not only direct corporate taxes, but also royalty payments that need to be paid to the provinces, coupled with the fact that the provincial entities also own a piece of every, oil and gas concession in the country. So there's a lot there. In addition, labor is pretty strong. I don't expect that labor will get any weaker. However, there needs to be an understanding that if you let more money come in, there will be more jobs for people. And so therefore, net, you'll get ahead. And in addition, equipment needs to freely come into the country without these, import tariffs on that equipment. You need, pretty sophisticated equipment in order to go ahead and produce properly.
At what point do you think it's just going to be too late? I know you see higher oil prices, but more money is going to go to renewables and greening the energy structure. I mean, 2030, 2040, at what point is it guys, we just can't do it?
I think if they don't get their act together within the next 10 years, it's going to become a hard sell, because I do expect that in the developed world, we will reach peak consumption of oil in 10 years. And so therefore, after that, unless we get massive booms in emerging markets and undeveloped countries, which is possible, that will go ahead and make up for the consumption that is now waning in developed countries, everyone will see the oil business for what it is.
That was my interview with David TAWIL, CEO of Centaurus Energy. As we wrap up, I want to take a look at how some of the companies that are getting hit by the Texas energy crisis and how they're faring as earnings are starting to come out. Occidental and Pioneer, both oil producers, are losing about 2% of their production. Just Energy sells electricity and is looking at a $350 million loss. And Exelon sees a hit to net income in the first quarter as of as much as $710 million after its plants were forced to shut down. And this is just the beginning. Lots more numbers are going to come out over the next few weeks. All right, here's what's on my radar for next week. It's Zero Week. Sure, it won't be in Houston, but it will be virtual, so that's when we get to hear from all the major oil companies and players all over the world. And March 3rd is Exxon's Investor Day. They just had to take a big write-down on their oil sands assets. They kind of took it out of their reserves portfolio. We'll talk about that next week as well. All right, that does it for Bloomberg Commodities Edge. You can catch us each Thursday at 1 p.m. New York time, 6 p.m. in London. This is Bloomberg.